Welcome back. You're watching Corporate. Let's focus in terms of Tata Metaliks as well. Let's quickly pull up the stock and see what the counter is doing in trade. Profits up 35%. Margins, however, have contracted and the stock is trading under pressure with cuts of 1.6% coming in there. Sandeep Kumar, MD at Tata Metaliks, who joins us. Welcome to the show, Sandeep. To start off with, if you could just help us understand how have volumes and realization growth panned out during this quarter versus last year?
Yeah, good morning and thank you for the call. The pig iron volumes have grown almost 46% compared to last year. This is, I'm saying, year on year. If you look at quarter on quarter, compared to, say, FY17, quarter 4, this quarter has been a significant jump, but that's mainly because of the fact that one of our blast furnaces was being revamped. So I think that number may not be very relevant. But to put it in perspective, it's almost more than doubled. Against 31,000 tons in quarter 4 of FY17, we have done more than 71,000 tons in quarter 4 this year. So that's on the pig iron side. As far as the ductile iron pipe business is concerned, it has been a growth from, on a sequential quarter basis, from 50,000 tons to 64,000 tons, or close to, say, 65, which is more or less the same as quarter 4 of FY17. But if you look at the year-round volumes, it goes up from, say, 182,000 tons of pipes in FY17, from there to more than 209,000 tons in FY18. So a 15% growth in ductile iron pipe sales and 46% growth in pig iron sales volumes. So overall, quite satisfying, despite the fact that FY18 was a year in which the GST was rolled out and the ductile iron pipe business had a lot of issues to contend with during the middle of the year.
Right. Beyond that as well, if you could just help us understand what has been the raw material price trend in terms of iron ore and coking coal, and how do you are expecting Q1 with regards to raw material?
So the coke cost on a year-on-year basis went up by, say, 34-35%. And why I say coke is because coke constitutes almost 60-65%, even 70% for some players as a cost, input cost to their hot metal. So that impacts the hot metal cost and therefore the pig iron prices significantly. The pig iron prices went up by more than 20% for us, while the ductile iron pipe prices went up by only about 4-5%. So we could not pass on the full cost of raw materials onto the ductile iron pipe side, though on the pig iron side, more or less, we were able to pass on because it's only about 60-65% of the cost. So therefore, you have to calculate it that 60-65% of 34% increase, which is more or less 20%. So that way, the pig iron business was able to pass on the cost, but not the ductile iron pipe business. And the reasons are twofold, essentially because of GST. The pipe business was impacted. There was a lot of uncertainty. That's number one. So it took a lot of time to clear that. It's only in quarter 4 that things have stabilized. Also, the fact that the ductile pipe business is a more stable business with orders which are executed over a period of 6 to 8 months. So the prices get booked much earlier. Because of these two reasons, the ductile pipe business could not pass on the entire cost, and therefore you would have seen a slight contraction in the margin there. But overall, for the company as a whole, the EBITDA margins have been close to 18% in FY18, quarter 4, and quarter 4 of last year also was almost similar, slightly more at 18.2%.
Right. And very lastly, Mr. Sandeep, if you could just help us understand what's the plan in terms of your expansion of plant is concerned. What's the capex assigned in FY19 for the same, and what's the growth we can expect?
So FY19, the growth will mainly come out of debottlenecking and, so improving the availability of materials. So because we are already at 100% capacity utilization, in fact, more than 100%. So we are trying to debottleneck and improve that, both on the pig iron side as well as on the ductile iron pipe side. So there would not be any major increase in FY19. As far as the main growth projects are concerned, they are on track for final clearances and approvals, and over the next few months, once they get cleared, I will be in a position to talk about it. At the moment, I'm not specifically able to talk about it because I need all these clearances to be put in place first, and the implication of this would be visible only after 2 years because it will have a gestation period to come up.
Right. All right, Sandeep. Pleasure speaking to you, and thank you for sharing all the details as well. So that's in terms of Tata Metaliks, the stock trading under pressure on the back of a slightly weak performance that we've seen in the fourth quarter, 1.5% lower on Tata Metaliks, but in the last 1 year, 22% is the up move that we've seen on the counter. But completely out of time. With that, it's a wrap on this edition of Corporate Eye. Thanks for watching, and lots more lined up on the other side. Please stay tuned.